Welcome to Manaf Speak Finance, the third episode, and with my guest Simon Weir from DS Insolvency. I've been working with Simon for the past 15 years. He's been dealing with all our clients' problems in terms of sorting anything that to do with liquidations, and he's been the go-to man for us. And the clients have been absolutely amazing with his service as well. So he's always got back to the clients. And so I'm going to ask Simon to introduce himself.
Hello, yes, I'm Simon Weir. I'm a licensed insolvency practitioner with DS Insolvency Limited. We've been going since 2016, but I've been an insolvency practitioner for the last 25 years, I think now. We're based over in Wakefield. We're just a small boutique firm of insolvency practitioners. And I think it's important to mention we're licensed insolvency practitioners. And if somebody out there is wanting to get some advice, it's important that they go to somebody who is licensed rather than sort of unregulated advisors, which is there are a lot of those people out there as well.
So how long have you been a practitioner? I mean, what made you go into this profession?
Nobody chooses to do it when they're a school kid. It's a bit strange, but I went to university and I just fell into it. I got offered a job at a company called O'Hara & Co in Batley, and I was 20 years old, and I just really enjoyed it, and I stayed there for a long time actually, and I went through my exams, did my licensed insolvency exams, and became a licensed insolvency practitioner in about 1999. So I've been qualified for like 24 years now, which is ridiculous.
Maybe the shows with the colour of the hair.
Yeah, thank you. At least I've got some. Yeah, thanks.
Excellent. Yeah. So
but it's changed a lot over the years in insolvency, and the rules have changed. It's an interesting career path, but I wouldn't.
Did you then? So when did you set up your own? So obviously, when did you embark on?
So I left. I left O'Hara & Co, who were based in Batley, in 2016. Myself and my colleague Dominic, we set up DS Insolvency originally in Ossett, but we're a bit nearer to the centre of Wakefield now. So that's been going for 7 years. And yeah, I look back, it's been very busy from day one.
So do you think that was the best decision you ever made?
It was
going solo.
it was definitely the best decision I've ever made to leave O'Hara's and set up. I mean, arguably, perhaps I should have done it earlier, if anything, because it's you don't look back.
I think in hindsight, I think everyone who does go on that journey, they always think that I should have done this many years ago.
Yeah.
But it's just that taking that step, isn't it?
Yes.
Yeah. So you've done the right thing. So,
absolutely. Yeah.
So obviously now you're in the 7th year in your company. So how has it gone for yourself? So in terms of getting clients, so it must have been a bit not a struggle, but trying to get a network going.
I think you get work from contacts, you get work from accountants, lots of good people like yourself, passers work. It's clients who trust you and who know you. Yeah. We don't really do any advertising. We don't get any work from the website. We're not really interested in that. We just want to get work from people that we know and clients that they know. So we've been busy since day one. We haven't looked back. We've been busy, and we were busy before COVID, and we were busy during COVID, and we're even busier after COVID.
So it's a sign of either the bad economy, or is it something's going in a direction where either the clients are feeling the pressure in terms of
I think there's lots of reasons why people get into difficulties and why they need help. There's all manner of reasons, and obviously at the moment we're still dealing with a lot of cases that are a result of COVID, and we've dealt with a lot of, for example, events companies where if you're an events company and you had 2 years of lockdown, you had no chance of coming out the other end.
Yeah.
We get at the moment we seem to get an awful lot of restaurants and that sort of business where. For all manner of reasons and competition and overheads and VAT issues. There's lots of reasons, and Just Eat and all these sort of there's
many
lots of
factors.
issues that come up time and time again.
Right. Okay. So in terms of obviously, you deal with all companies as such. So, what are the type of the services that you offer?
I mean, primarily we give advice to directors. Almost all our instructions come from the directors. So the director comes to us, his accountant has introduced us, and we'll sit down with the directors and we'll explain what options they've got available, because invariably they're coming to us because the company's in difficulty.
Yeah.
It's not always the end of the line. There might be ways around it. They might be jumping the gun, but it's the directors that generally come to us. We do also advise directors in solvent cases where perhaps they're wanting to retire and they're wanting a tax efficient way of winding down the business, getting the money out of the business, and doing a solvent liquidation. And so we do solvent liquidations, perhaps 5 to 10% of solvent, and then the other 95% are insolvent liquidations.
I see.
We do give advice on a personal basis as well to individuals who might have debt problems, credit cards, and that sort of thing.
Okay.
But that only represents quite a small proportion of what we do now.
Right. So the majority is all to do with the director and companies.
It is. It's small.
And the best way of the type of liquidation or insolvency that they would actually go through.
I mean, there are different processes available, and if a company's insolvent, some of the official processes. The main one is the creditor's voluntary liquidation, where the director instructs an insolvency practitioner to wind up the company with their assistance. For bigger jobs, sometimes administration might be more appropriate. And administration might involve possibly trading on the business and trying to sell it, or doing a pre-pack sale back to the directors or another party.
Okay.
There's also something called a CVA, company voluntary arrangement, which involves trying to basically restructure the existing company's business rather than winding up the business and starting again. So that's an option as well.
Okay, that's obviously gives again. I think that's an evaluation when somebody comes to you and you see the situation and you obviously then look at the best solution for them.
Mm-hmm.
So, in terms of the type of situation that you come across, and I think the biggest one probably and probably from audiences hearing this probably be the bounce back loan. I think that must have been. Yeah, this is a huge impact on many companies.
At the moment, the phone calls and the queries we get, when we sat with the director, the topic of bounce back loans invariably comes up, where companies have received COVID support. Generally, they got a loan of up to £50,000 in. It would have probably been May, June 2020. They may have got a subsequent CBILS loan on top of that and paid off the bounce back loan. But they are a hot topic, and they're a hot topic because certain companies have obviously abused the system, taking out bounce back loans that they were entitled to do, or taking out bounce back loans that they were entitled to, but then spent it in a way that they weren't supposed to do.
Right. Okay.
And as a consequence, it's in the media all the time, and the Insolvency Service are obviously looking at disqualifying directors who've misapplied the bounce back loans.
Utilize the monies in a wrongful way. So, but there are obviously situations where the loans have been used rightfully. For the survival of the business, and again, we've come across many situations like that, who have actually done everything possible to keep the business ticking away. But again, unfortunate that they've come to that sort of situation, and then obviously you help them out. So, and what are the consequences, obviously, of going through a liquidation? So, in the situation where client has, genuinely is in a trouble. So, what are the situations or worse?
Well, I mean, there's every case is on its own merits, and certainly we deal with lots of people who are genuinely, hardworking people, and they may have got bounce back loans and have spent it to try and save the company. They've done nothing wrong, and they've nothing to worry about. But some people have misapplied the loans in a deliberate way, and we've seen some companies that were entirely dormant, that weren't trading, who've put on the application, the turnover is going to be 250,000, got a £50,000 bounce back loan, and bought a new car with it.
And that's how easy it was to obtain those loans. So,
Yes.
so it was coming to this situation. So I think it was heading to this type of direction where people have claimed things that they shouldn't have been claiming.
I think it's a hot topic. It's been a hot topic for the last couple of years. Perhaps in another 2 years' time, people won't even remember what a bounce back loan is. It's just something that's a hot topic at the moment.
Right.
The Insolvency Service clearly have targets to disqualify directors, and that they've recruited quite a lot of additional staff who are working through the backlog of cases and looking at the ones that deserve to be looked at. They're not. I don't think they're picking on people that have been genuine. So if you're a genuine director out there, you've got nothing to worry about.
I mean, what obviously we've done, and obviously you've helped with things, is that where we go through all the transactions through the banks, etc. We can obviously establish or look at things and see where the direction of that company is.
Our policy is to be full and frank from the outset. There's no point pretending to everything's all right if there's a problem. So let's get it out on the table. Let's find out if there is a problem and is there anything.
And then to solve that, and I think there's been many occasions where there was, I think, a life coach company that we had where the client was again in the same situation, but you solved that in terms of agreeing with the banks. Well.
So we've had cases where they've had to pay some of the money back. Sometimes they've had to pay all the money back. Circumstances are different on each case, but it's better to know about the problem at the outset rather than halfway through the liquidation.
And from your sort of experience, then what sort of worst case scenario have you come across where it's been absolute?
The worst case scenario is that if the Insolvency Service decide that there's a case to answer, that they've misapplied the money, then the directors may get disqualified.
Okay.
The Insolvency Service can also get a compensation order against the directors.
Right. So, which on personal level?
Yes. Yeah. So it's effectively a personal fine that the Insolvency Service levy on the directors.
Right.
And that is kind of really, that doesn't affect the liquidation, so to speak. The liquidator's still got his job to do and look at what's gone on. But the Insolvency Service, who are a government body, it's like almost a two-pronged effect on the director that in those circumstances, you could end up getting disqualified, and which for some people is water off a duck's back and they're not bothered, but for other people it's a major problem. If you've got lots of directorships, you don't want to be disqualified.
Right, no, that's perfect. Yeah, I mean, like I said again, looking at the right situations, so that's and so there's other sort of situations where if someone has if they need to set up another company as such, so if they have been through in liquidation. What's the time frame or time period that they could restart again? Or
there's nothing. If a company goes into liquidation, there's nothing initially to prevent the directors from setting up another company straight away if that's what they want to do. There are strict rules about reuse of a company name, so they will be prohibited from using a company name unless they go through the right process. And there are different processes. I won't bore you with the details, but the director can use a similar name, but they have to do it in the right way and they have to do it through the liquidator.
Okay.
But unless the directors are disqualified in the liquidation process, then there's nothing to stop them from setting up another company, and they often do. And directors might have already set up another company prior to liquidation. But the issues that tend to arise are reuse of a company name is something that they need to be careful of and get advice on. The other issue is if assets have been transferred from the old company to the new company, have they been conducted at a proper arm's length basis? Have they been valued? Have the funds been paid for the assets?
Right, and this is something that where if something has gone into liquidation, this is where you would obviously investigate and look
The,
into
the
that.
liquidator's
Yeah.
got an obligation
Yeah.
to investigate whether there's any transactions at an undervalue, whether there's any preferences. So a preference is where you know the company's insolvent, you've got some funds, and you basically pay off a creditor, normally an associated creditor, who you're paying off to the detriment of the other creditors.
Okay.
So these are all transactions that a liquidator has an obligation to look at.
Right. Okay. Excellent. That's good. So, I mean, from your life that you're obviously with insolvency practitioners. So, is there a time where you wake up and at night time you think, oh my God, so, you come across all these situations and you can think, well, if you could write a book, you could say, well, okay, these are the don't do things for company directors
Absolutely.
that could actually save them from going into
Yes.
this type of
The
situation. So
absolutely. Unfortunately, people generally come to us for advice when the company's at the end of the road and it's a bit late. I mean, one of the sort of classic ones is when the director comes to you and you're going through the list of creditors and he says, well, I've given a personal guarantee to this one, I've given a personal guarantee to this one. It's like, this, and he's asking, what can we do about it? And it's like, well, it's a bit late now, isn't it? Perhaps, giving personal guarantees is never a great idea. And I think in a similar vein, some directors perhaps don't realise when they should call it a day. And, it's the old adage of when you're in a hole, you don't keep digging,
you just have that, it's one of those things where you got your heart into there and you just can't let go of something.
Yes.
So even if it's going at the adverse situation.
Yes.
But I think somebody has to just knock on the door and say, look, call it quits and before you go into further and further debt, into debt.
People rarely come to us too soon for advice. They generally come too late. And, certainly we, if a director wanted advice on the insolvency options, whatever, we would meet them. We wouldn't charge anything for an initial meeting, we're not chasing work. We've got plenty of work, so we're not going to try and twist anybody's arm to wind up the company if they don't need to do it.
Right.
It's,
so that's something I presume for anyone here listening to this that again obviously giving that free advice for a certain time frame to just ease their sort of mind, but obviously again if something that needs to be in more depth, then obviously you can go into that and advise a bit more in detail.
I think the best thing for clients to do is to speak to accountants, and then accountants will, if they need to steer in our direction, so be it, and I'll have a chat with them.
So from this then, so what would you advise the viewers to your best points
I'm a bit of a doom and gloom monger, aren't I? And most of the people we deal with have probably had some sort of business problem, but I don't think it should put you off from going into business, but you perhaps get some advice early on about the pitfalls and what you can do and what you can't do. At the outset, we always sort of say that it'd be great if people came to see us when they were setting up the business, and then you could tell them perhaps try not to do this and do that. And do you know what I mean? For example, if there's a property and there's a trading business, probably not have them in the same company because it's just a recipe for disaster.
So again, obviously to keep your trading and investment separate.
Yes.
I mean that's probably a topic for another day, isn't it?
It is. Another one would be sometimes directors get into a mess with directors' loan accounts, and this is probably where they're not getting advice from their accountant. They should be speaking to their accountants, but what they're doing is taking monies out of the company. Perhaps at a time when the company isn't solvent, doesn't have reserves from which they can draw dividends. So in the end, they end up racking up an overdrawn director's loan account. And if then the company goes into some form of insolvency, then technically they owe the money back.
Right, so it's a personal debt.
So some directors are not really fully aware of that, and perhaps they should be.
Right, okay. So I think that's really good advice there. And so it has been a pleasure having you.
It's been a pleasure being invited. Thank you, Manaf.
Anyway, so hopefully, the viewers found something useful there to take away. Just drop a comment or a like, and or if you need to see something else in terms of valuable information for businesses, let us know. And thank you for watching.